Okay, so for this video, I wanted to cover the IRS Form 5213, which is a filing to postpone the determination as to whether your activity is engaged in with a for-profit motive. Okay, so I want to talk about the form itself, who should consider filing this, and potentially why you should just avoid filing this altogether. So I've got the form in front of us here, we'll walk through, but I've got a slide here with some of the background on this, and then a fact pattern that we'll talk about, and then go back and look at the 5213 form. So when does this kind of issue arise? Well, it comes into play with the hobby loss rules. So if you're familiar with these hobby loss rules, effectively what the IRS says is that if you have an activity that is a hobby, so you're not engaged in a trade or business with a for-profit motive, the hobby income is still reported as gross income, it's still subject to tax, and you can deduct expenses in connection with that hobby, but you can't deduct more expenses than you have revenue. So in other words, you can't take a loss on an activity that is a hobby. Versus if you have a trade or business activity with a for-profit motive, you can generally use those losses and offset other kinds of income. Okay, so this presumption basically says that, so we look at section 183D, the presumption is that an activity is engaged in for-profit if it shows 3 consecutive years of profit in a 5-year period. So in other words, what this means is that most people are in a position where if you have lost money for 3 consecutive years in a row, now this hobby loss presumption kicks in. And so now you're looking at your return thinking, okay, should I be deducting this loss because I've tripped over these hobby loss rules? Now the 5213 comes into play because what it does is if you file it, you can postpone the determination for another year. Okay, so if we look at an example here, we have John. He opens a single member LLC, John Doe Commerce Company, and he starts selling products on Amazon using Amazon's FBA platform. Now John's running the business for a couple of years. The first 3 years he's in operations, he incurs losses, right? So he has a loss in 2019, 2020, and then 2021. So now he's getting a little worried and he's thinking, okay, well, I've got 3 years of losses. Is the IRS going to challenge this with, are they going to say I don't have a for-profit motive and they're going to disallow these losses? So John, in this context, could file the 5213. So if we look at the 5213, it's pretty straightforward. This is filed separately from your tax return. Okay, so John completes it with his identifying information. So again, this is a single member LLC that's disregarded. So everything's being reported on Schedule C of John's tax return. So he puts his name, his social security number or ITIN, his address, and then what we're saying here is the type of taxpayer we have here is an individual. And then the IRS asks you to give a brief description of the activity you're conducting, and you should provide some context as far as the losses. So John Doe, the taxpayer here, operates an e-commerce business through John Doe Commerce LLC, and it's a single member LLC disregarded from the owner, right? So that means it goes on Schedule C. The taxpayer is engaged in the business of selling electronics on Amazon, and the taxpayer incurred net losses on Schedule C for the following tax years and amounts. So he lists out, look, in 2019 I lost this much, in 2020 I lost $65.20, and then in 2021 I lost $4,060. Now he says, okay, I'm going to file this because I want to request a postponement of the determination as to whether the presumption applies that the activity is engaged in for profit. And then he indicates down here the first year that he engaged in this activity as listed in Section 2A. Right, so he completes this, signs it, dates it, sends it in to the IRS. Now, here's the problem with this whole form. The 5213, it certainly does buy you another year. But the reason why I generally don't like this is because it's absolutely a red flag. Right? I mean, the IRS only has limited resources to look at a certain number of returns, a certain number of individual business returns. If you file this, you're almost already putting, a target on your back, so to speak. So it could unnecessarily invite further IRS scrutiny, perhaps an audit, just a correspondence audit. And the other reason why I don't like this is there are lots of businesses that operate at huge losses for many years. Right? But they can still demonstrate a for-profit motive. I mean, there are a lot of companies that lose money for 20 years and they're running on financing, both equity and debt for those 2 decades. they can still show that they have a for-profit motive because you look at all these other qualitative factors, right? You're hiring employees, you're doing marketing, you are trying to cut costs, right? You're doing everything that you can from a business perspective to make it look like you're trying to make money, right? Obviously you want to be profitable, you just aren't. And if that's your type of business, then I would not recommend filing the 5213. Just keep doing what you are. And if the IRS does flag you because they see 3 or 4 years in losses, you can show these qualitative type of elements. You can show them that, look, we are running an actual business here. We're just not profitable, which is we're not alone here, right? There are a lot of companies that are in our position. So the 5213 is a good option to grant you another year, but in most cases I recommend really just looking at your core business itself. And if you've got these factors in play that support you are running an active business, you do have for-profit motive, you're just running at a loss right now, then keep doing everything as you are and don't worry about filing this 5213. Okay, so that covers it for this video. Hope that was helpful. If you have any questions, leave me a comment below, and I look forward to seeing you again on the next video. Thank you.